Welcome to this video. In this video I'm going to be doing a stock analysis of Chargepoint holdings. Now as you can see, currently the stock price is trading at 10.8 USD, which is quite decent. But something you should note, and something that is not a great thing that has recently happened, is as you can see right here on the 28th of July this year, they made a reverse stock split for 20-1 stocks, which means if you had 20 stocks before, now you'd only have a single share. Now I'm going to make this graph a bit larger. I'm going to make each candle and a day instead of an hour. Now, as you can see, this stock quickly rose quite a lot, and then it has just had a poor ride ever since then. Now, as you can see, this is almost $1,000 up here. That is not true. You have to divide this by 20. Because, of course, as I said, if you had 20 shares before, now you would only have a single share. And the reason for that is, of course, because there's a certain price you need to have in order to stay on the NASDAQ. That is why they had to do this. Now, let me just make each candle a day, not a day, an hour, I mean. As you can see, we have been trading up and down, but overall it is just quite a lot of downwards and not a lot of upwards. As you can see down here in the RSI as well, we traded down here in the bottom RSI quite often. Now, if you don't know what RSI is, that is the relative strength index, which shows which way a stock is moving. So if it's between 50 and 30 down here, it's moving downwards. And as you can see right here, when it's below 30, it's being oversold, meaning this stock is falling rapidly. Now, the opposite is, of course, correct over here, where it's above 50 and between 70, it is in the upper channel, meaning the stock is moving upwards. And up here above 70, it's overbought, meaning it rises rapidly. But overall, it has been quite a rough stock to own. We only have one slide overbought for quite a while, and that was, as you can see right here, just before the earnings, and then on the earnings as well, as you can see right here. But overall, I'm not a fan of stock splits, but I do like Chargepoint Holding itself as a company because they're in quite a lot of countries, as you can see right here. Now, as you can see, this is a map of Europe, and you're going to notice it looks quite weird, and that's because every one of these circles is just a sense to see how many charging stations do they have. As you can see, there are in quite a lot of different European countries, and it's going to blow up a bit more as I zoom in. As you can see more specific where they have these charging stations, and they also have some in Scandinavia as well. So it's great to see they have in these countries with huge penetration of electric vehicles, which is of course lovely to see. Now we also have some in the United States as well. As you can see, if I go over here, just let it load for a while. Right here, as you can see, there are in the United States as well, and in Canada, and in Mexico, and in Southern America as well, which is nice to see because in a business like this, you of course need volume. That is why I do like Chargepoint quite a lot, because of course there are only two companies that are publicly traded would only do this. One is called Blink Charging, and the other one is Chargepoint. So, but I do like Chargepoint quite a lot because they are in so many different countries. Now, the market cap of this stock is quite small. As you can see, it's only $253 million, which of course is quite small. And we have a beta of 1.29, meaning it's a bit more volatile than the average index. Now, the earnings here, of course, sometimes they're great, sometimes they're poor, but overall, I mean, it's not too shabby for a company like this, which isn't that old as well. Now, as you can see down here in their earnings, as you can see right here, how do they make their money? Well, network charging systems, subscriptions, and other. And subscription, that is because, of course, say you have a home and you want to buy a charging station from ChargePoint, well, then you buy it and you subscribe to it. And there is the other version as well, where you pay, let's say, $100 a month and you charge as much as you want. As you can see down here in the overview, we have a small problem, that is the debt. This company has a ton of debt, and that is something that we don't like at all. Of course, the rent right now, not the rent, the interest rate is quite high, and that of course is quite poor. As you can see, they have a more debt than cash equivalents. They actually have more debt than market cap total. So overall, this is quite poor at the moment, and I want to see them reduce this. But of course, the rate just went down in the United States, so hopefully they can improve on that situation at the moment. Now, if I scroll down here to look at the seasonals, as you can see, the seasonals are quite poor. As you can see, it was firstly publicly traded back in 2019. As you can see, overall, we have had some quite rough years. 1, 2, 3, 4, 5 years in a row where it has just been absolutely tanking. Then we had 2020 where it rose by 300%, and 2019 went up by 1.5%. But overall, this is a very volatile stock, and you should only buy a small portion of this. I personally think so, because I do think it's got chances are this company could go bankrupt, and that is simply because they have so much debt, as you can see right here, which of course isn't great, but they need to get a lot of debt to invest in these charging stations all over the world. Now, as you can see here for the technicals, for the day it's a sell, and for the month it is still a sell. And as you can see, that is just because it has just been falling overall, and we even had this death cross right here on the, what is that, the 9th of September. Now, the analyst rating on this are quite mixed. As you can see, it's neutral overall. We have 1 strong buy, 8 hold, and 2 strong sell. So overall, this isn't the biggest stock in my favor at all at this moment. Now, as you can see, annually here, we don't even know when they're gonna make any proper money. That is something I don't like at all. As well here in the annual revenue, as you can see, they're increasing it, but not as fast as I would like to see. Overall, this is a very high risk stock in my opinion. So of course, only do your due diligence before you invest in a stock like this. Now, if you want to see more videos like this, please don't forget to leave a like and subscribe, and comment any other videos you want to make on other stocks.